Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 225 for May 20th, 2019. If you have not had a chance to look at today's report, we are going to be discussing number 295. You should be seeing that on your screen while I'm talking right now, but you can also go to TimingResearch.com/reports to get access to either the web or the PDF version. We are broadcasting live on YouTube at 1 p.m. Eastern Time. You can also listen to the audio-only podcast version of all episodes on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. My name is David Cosmeter. I'm the creator of Timing Research, and today I have arranged for Marina Villatoro, Mark Sachs, and hopefully Neil Batho will be joining us in a couple of minutes. And Jim Kenney is back to moderate. I'm going to go ahead and turn it over to Jim.
Great. Okay, thank you, David, and thanks everybody for being here with us today. Before we get started, we're going to go around the horn and let everybody introduce themselves. So we're going to start out with Marina Villatoro, and she's going to tell us a little bit about herself, and then, of course, what her company's doing.
Hi, my name is Marina Villatoro. My company is The Trader Chick. And I personally trade futures ES minis. I do enjoy stocks, mainly for longer term. And my goal, what we normally do is I focus on beginner traders to help them understand how to begin trading, the basics, which is the market, what the market tells you. And basically, I'm 100% technical trader, meaning I only use technical analysis, and that's what I really focus on, the telltale signs. So that's kind of my thing, and I enjoy sharing that with others.
Great. And Mark Sachs is with us from Right Line Trading. Mark, brief explanation of what you guys are doing there and a little bit about your background.
Okay, I'm Mark Sachs. I've been involved in the financial markets for 15 years. And our company has really created software that does the evaluation of multiple markets and multiple time frames on the same chart. We'll look at order flow momentum, but it'll be done on multiple time frames. We also create a neural net. If we want to trade the E-mini long, we want to take it long at the same time that the NASDAQ, Russell, and Dow are also heading long. So we evaluate multiple markets on the chart, as well as multiple forces that move price, like momentum, like order flow. And we do that all on a multi-time frame basis.
Great. And again, today we're going to go over a number of questions that the audience has answered themselves, and we're going to be asking them of you as well. So let's get right into it here. What direction do you feel the S&P will go this week between today's opening, which was 2941, and where you think it might close on Friday? So we'll start in the same order. Marina, what's your feelings on this week's action?
I personally believe it's going to be sideways market going towards, going lower this particular week. I guess I'll get more into the reasons why, but I personally believe it's going to go lower.
Okay.
Not too much lower, though. Lower.
And Mark, what's your feeling on the direction from the opening, which was 2941? 2841.
Well, I just wanted to share my software real quickly, and
sure.
And I think, can you see it?
Yep.
On the right edge, we've got the pink background, which means that the E-mini's in a multi-time frame alignment to the downside. The candles are highlighted magenta, which means order flow is aligned to the downside. This first line is the multi-time frame direction of the Russell, NASDAQ, and Dow, which is aligned to the downside. Momentum is aligned to the downside. So, I see the market moving down throughout the rest of the week.
Okay. Yeah, and that's some technical evidence on why you have that opinion. The next thing that is asked is, based on where you think it's going, what's your confidence level? Obviously 100% would be you're obviously 100% sure, and then obviously change your percentage based on your commitment. So Marina, how do you feel percentage wise on your call that it might be drifting sideways? Well, sideways to lower.
Oh, I'm 90% sure it's going to go lower, but I personally believe it's going to be very stagnant this particular week. So yeah, I have my right here as well. This is just daily chart right now for me, but I believe this is going to be more or less the range. Maybe head down a little bit lower, maybe to around the support area that was mainly like a pivot. So yeah, I'm 90% sure. But again, it's wrong. But yes, I'm pretty strong on my.
Just as long as there's no tweet, right? The tweets will change your whole thing, possibly, right?
Yeah, well, it always does, right?
All right, so here you go, Mark. Your percentage of confidence in this downward move possibility?
Really similar to Marina. I think as long as today we're seeing Intel, Broadcom, Qualcomm all taking a big hit because of the of the Chinese telecom. I think as long as there's this kind of uncertainty in the market, and those fundamentals along with the technicals, I think if you're going to go in any direction, you got to go short, and I think the probability is very high. 80 to 90% down.
Right. Now, you went over a little bit of your reasonings, but let's go a little bit further under the hood and get a little bit more feedback, Marina, on some of the things that make you feel that rolling over to the downside outweighs the likelihood of it going up.
Okay, so I follow, I'm a day trader, but intraday trader mainly, and I scalp. So I really don't follow the overall news. However, the whole thing with the China and just all the chaos is kind of going on. I do look at it for the longer term. However, why this particular week I feel that is going to be very stagnant, and if anything start to go down, is one, the China situation. It's too uncertain, and maybe it is dying out, but I don't think it's dead yet for us to have like the real direction of where it's going to go. However, also FOMC is in meetings this week. Usually it's only Wednesdays that they're really in meetings, and normally I don't even come near the market on FOMC day. However, this is where I go usually to Forex Factory to check out my news for the week, and there's too many FOMC meetings going on. Not that I really care what they're talking about. Sometimes it doesn't even matter, but because of that alone, I think puts too much indecision into the market and kind of keeps it bouncing back and forth until we get like results from the meetings and get a little bit more stability. So that's why I truly believe it's going to be moving kind of back and forth and maybe even headed down until we have more certainty in what's happening altogether. That's my 2 cents.
Yeah. Is there any other reports coming? Is there any other reports coming out later in the week that you think could be important? I see you got durable goods coming out on Friday, and is there anything else coming out this week that you're kind of looking?
Yeah, the Treasury currency report. So this is what I mean about because I am like a scalper. I would not be anywhere near the market when these reports come out. I would wait, and normally it gives it's like a good half hour to 45 minutes for the certain short time frame that I trade. However, for the longer trade, again, I don't ever really like to know what they're going to talk about or predict, but that alone makes people really uncertain and kind of just hang out and not really take massive confirmational decisions, if that makes sense. However, the FOMC, that really just breaks things up. If anything, to be honest with you, Thursdays probably be like the best day for the intraday trader because there are no news, the minutes have come out, and it's a good day to kind of play around. I might have some stronger direction, but Friday again will probably be even more indecision on top of that. So that's kind of my forecast for the week of what I'm going to be doing as well.
Sure. Now, Mark, you showed us the technicals on your opinion on where we're going this week. In addition to the technicals that you showed us, anything else in your wheelhouse that would be of interest explaining where you're coming up with this, feeling that there could be a rollover later in the week?
Well, first of all, we have two general overall strategies that we take when we day trade, and I day trade futures. One is when I feel like the general trend is a little more stable than it is now. And right now, I agree with Marina completely. It's a little bit unstable. We take more of a scalping strategy. This morning I traded the NASDAQ. We were done in 26 minutes. I mean, here's my Superdome. We got 100, 100, 100, 100 on 4 trades. We were done. So we made $400 in 26 minutes on 4 trades. Now, if the market is a little more trending and stable, and in addition to what Marina brought up, there's a lot of news coming out, like the FOMC. There's a lot of speakers, and I think it's a good thing because it's going to inject a lot of volatility, a lot of uncertainty, and for day trading, I think that's great. So we go to more of our scalping mode on 2 contracts. We're just looking for $100. That's 2.5 points on the NQ. Bang, bang, bang. If I thought the market was going to be a little more stable, fix a direction, I would go with with 3 contracts, one off at 15, one off at 25. So that's just our overall general strategy. I still think, again, everything that we see right now is all leading to indecision. Multiple reports from the FOMC. Nobody knows what's going to happen with Trump, his tweets, with the trade problems with China, with his ban now on Chinese telecom. I think Intel, Qualcomm, and Broadcom can still swing down a long way. Whoops, sorry about that. Let me just let me close a bunch of my charts here that are giving these.
Okay.
And
I was going to ask you, Mark. You were trading the Qs earlier today, right?
No, the whole day today I trade crude and I trade the E-mini. I'm sorry.
Okay, I thought you were trading the NASDAQ earlier today, the QQQs.
Yeah, I'm not. I don't know. I don't know why I'm getting this alert. I may have to close this chart if it keeps up. But okay, I'm good. No, I trade the NASDAQ and I trade crude.
And so when we're talking to the NASDAQ, are we talking about the Qs?
No, I'm talking about the NASDAQ futures.
Oh, the NASDAQ future, not the Qs.
Right.
Okay, because I was looking at a chart on the Qs, which some people might be trading, and it looks like it gapped down obviously today, and it is holding right above the area in the high 170s, and it looks like if it took out the 170 high 170s, I guess last week's low, that there could be some acceleration to the downside potentially. And with the SMH, the semiconductor index, do you watch that at all, or are you just doing futures?
I'm just doing futures in the trading room. And
okay, then I'll keep my comments towards the futures then. But I guess on the NASDAQ future, it must be right above last week's low as well. And you see, what's the potential in your view that we take out last week's low on the NASDAQ future? And maybe, obviously there's not much underneath it holding it up if it took out that level.
I think we got a good shot at it because there's so much indecision in the market. And I think that a lot of traders are holding their positions profitably, and I think there's a lot of weak hands, and in a period of indecision, they're going to be dumping like crazy. And
right.
I'm looking at the Qs right now, and they are heading down. I'm gonna format a QQQ chart and put it up. You know what? I'm going to have to close my E-mini chart.
Yeah.
Because
all right. Well, while you close that down, why don't I swing over to Marina, and we can stop hearing that noise and your son's paintball outfit.
Okay. I'm sorry about that. Okay.
Both are very interesting, but at some point they get annoying, right? At any rate, let's swing. Can you close that out, Mark? And I'm going to swing over to Marina, and she's going to. You mostly, Marina, you're doing, if I understand it correctly, relatively short-term trading on the E-mini, correct?
Yes, I do very short term. I get very stressed if I'm in it
Okay.
for longer than 15 minutes. Yeah.
I got you. So can you give us some idea of how you go about trying to discover what would be good for the short term?
Yeah, so let me share my screen here. Just give me half a second. Okay, so right now I will not be in the market pretty much at all. Sorry about that. I would not be in the market right now at all. It is just, I'm a very conservative trader and I
Yeah.
love my technicals. I love support resistance areas. As you can see right now, the channel is what, at 44. It's less than 10 points in between. So I don't consider this a tradable channel either. I don't really like to go around 15, 20 point difference for the channel. So
Right.
it's just too erratic for me, right? Because I go in for similar related to Mark, what is 1 point, right? I like to go for the 1 point. So if I'm going in for 1 point, I also like to do 1 point risk. So I'm a 1-to-1 person. So 1 point here is so easy to do. That means I get stopped out in 1 point
Right.
rather than, so right now, my chart is just telling me stay out. There's too much indecision. Let the
Yeah.
markets calm down. And I totally believe that that's for the FOMC. People are starting to wonder, what are they going to say? What's going to go on? It might be great. It might not. I don't ever like to predict what the market will do. I just like to see what it is doing in front of me at the moment. So that's
Would you
kind of
say
how
it might like another way of saying it right now would be it might be too weak to buy and too low to sell?
I don't actually look at low or high because I believe the market you could do just as well going high or low as far
Yeah.
as so for instance here, right, this is my EMA that I use, which is on the 610 chart. This is kind of like if you're an archer, you have a space where you stand before you throw your arrow. And
Right.
honestly, at this point, I don't know where to throw my arrow. I don't
Yeah.
feel confident enough for me to say, oh, it's going to go back up or it's going to continue down. So at the moment, I like to have more comfort in knowing exactly what's going to happen. And these types of trading channels, I'm not very convinced. So yeah, at this point, I don't want to say yes or no to anything. Eventually, I can almost guarantee and probably bet the house that eventually it will get to this resistance area. However, when that is going to happen, I don't want to say until there is massive confirmation. And here's my other way of looking at it. I love the MACDs. I live by the MACDs. So this blue line is my zero line.
Right.
And this line here shows me that there is enough strength in the correct direction. Look how weak it is. It's barely even over the zero line. So,
Right.
so I don't even want to go there. I mean, it's kind of crawling up. It's maybe going to be around this line here, which is at
Yeah.
around 0.3, 0.4. So at this moment, I wouldn't even come near the market. I would just sit back and just chill and enjoy seeing what it does.
Do you ever
That's
look?
about it.
I got a question for you. Do you ever look? I don't know where those sounds are coming from. Anyway,
That's fine.
do you ever look at like ranges? Like, and I'll just give you something that I'm seeing is the big range is 2930 and 2800, and maybe a sub range might be something like 2860 and 2825. Do you kind of wait for stretch points in a trading range and then try to do more activity as it gets closer to a higher low, or are you just really looking at something different?
No, I'm super micro. So what you're talking about is really huge ranges. I don't
Gotcha.
trade the future, or I actually don't even trade the SPY, to be honest with you, for my long-term
Right.
investments. So I wouldn't be looking at that. No, for me, that's too big of a range. I like the little guys, one pointers. I'm in love with one pointers. I like when it's a new trend starting to happen. That's usually my best one because that's usually the strongest. But
Right.
and also the MACDs. Right now, I mean, they're barely. It's just yeah, this would never work for anything. Yeah, so I like to really look in the moment to
And
see what's
how
happening.
long do you try to how long do you tend to hold these things for?
So I like to go when I go in with one contract. I usually now go in with 2 to 5 contracts. So my
Right.
first entries is 1-to-1. I always go 1-to-1. The second I hit my profit, I only hit my profit with 1 contract. So the other 2 to 4 contracts that I have, I usually have a higher target. But the second I hit my first contract, my first point contract, I immediately move my risk to 0. So at this point, there's no more loss possible. I could break even. The only thing that I will lose would be the commissions. Or if it goes on, my next target will be another point, and so on and so forth, right? So I start with 1 point because that's the easiest. It's the least amount of risk as well on the table.
So I'm trying to, make it understandable in that you try to keep these trades on a very short leash. God, what's this
Very
guy?
short leash.
Mark. Put a leash on that. Put a leash on that computer over there. Yeah, so you try to keep it on a short leash, and then basically, as it goes up, you scale out of it. So if you had 3 or 4 positions, you might get out of all of them at one time, or would you more likely scale out?
So I usually like to scale out. However, I really love my MACDs, and if it starts to even, like right here, that's a good example. You see how it's just starting to curve a teensy bit? I will be out right away with all my positions if I've already gotten 1 or 2 immediately. Like I wouldn't even consider it because the MACDs to me are just, they're so right on for the majority of stuff, and divergences.
So on the way up, you could scale out, but if you're putting a defensive stop in there, it's for the entire position.
Yes, that is for the So the second I make my first point with 1 contract, and let's say even if I go in with 10 contracts, so that's 9 left, I would move the 9, which is in my risk of 1 point, immediately to the break even. So this way, I've already made money with the 1 contract. And if it retraces, then it retraces, and I get stopped out, but I break even, I lose on the commissions. But I know that I feel safe. I'm not here to get stressed. Oh my God, I've been there, I've done that.
No, you're trying to defend the capital as much as you can.
Yeah, and my emotional capital, because this is it's about the money, but when you lose it, your emotional capital costs so much more than your.
There's a psychological cost as well as a financial cost, is what you're saying.
Oh, such a huge cost. Yes.
All right, I'm gonna switch over to Mark if he's still there. Mark, are you?
I'm here.
All right.
I'm just getting my tech guy to turn off the alert. Just give me 1 second, okay?
All right, sure. And while we're doing that, in addition to the Nasdaq, you're also trading the S&P. Do you have an S&P explanation on how you would do a sample trade kind of thing?
Where's it coming from? Do you have any charts open? Only this chart. Everything else is closed.
All right.
Yeah, let's give Mark a minute to figure that out.
Yeah, we'll go over to Marina. Yep. I can only do what I can do here. Marina?
Hi. Yes.
Okay, there was another question that we kind of go over, which is the platforms that you use. Is there any platform that you find most attractive or most valuable to you?
Yes. So the Ninja Trader, I started trading with the Ninja Trader over 7 years ago when they did not have a brokerage account. And I got in with AMP Futures. So they're not connected any longer because Ninja Trader has their own brokerage.
Right.
And not only do they have their own brokerage, but they also have their own brokerage, I guess, sisters or brothers, even though they're not part of it, that they permit. The reason why is, number one, it's definitely the best software for futures, but it's so interactive and so easy. You can literally trade everything on your charts without going into the dome, which takes you away from, because I am such a micro trader.
Right.
I love that. But also, I know that there's a lot of people who are listening who are really interested in equities and options and whatnot. I have another whole account with TD Ameritrade, which I think Thinkorswim has a fantastic platform for equities, stocks, options. And that's where I don't day trade those, though. I am swing trading and long-term trading. So that is my other chart that I really enjoy using. It's got way too many indicators. I think it could blow your mind, but once you just come up with like the few indicators that you want to stick with, it's great. They're both fantastic. But for futures, Ninja Trade.
Now today you want to focus on just what you're doing on the short-term trading, correct?
No, I'll be happy to talk about longer term, more for in the equities. For futures, I don't ever really think of it. So, and it's kind of hard because I am such an intraday trader for futures
Sure.
that I don't really care.
Are there
as
any
far as
are there
chart
any other,
trading.
like, you obviously we talked about the E-mini S&P, but is there any situation going on in any other markets on the futures that you're trading that might be interesting for the listeners to hear about?
No, I actually don't do anything else in futures. So
Oh,
what
you're
I
saying,
do love is the stocks. I personally, right now, everything is kind of being battered up because of this China agreement, and it's just a low day period, like with all
right,
of my positions.
right.
So I don't really care because it's a longer term thing, but I do love IPOs, and we are in the IPO season. I guess
Yeah.
there's been like a few really fantastic IPOs. So yeah, I really love following IPOs. It's the
So
springtime
have
season.
you been have you been following Lyft, and have you been following Uber, and
Oh, for
uh,
sure. I'm in both.
the new coffee
I'm
one
in
from
both.
China? Are you doing that at all?
No, I don't. I'm not doing any of that. I don't really. I think coffee is just a saturated market. I am also in Zoom and Pinterest. Again, I like to really just. I love disruptive markets. I don't care if
Right.
you're going to be telling me that Uber is going to be beaten up now. In 10 years, it's going to rocket because it's here to stay. And Lyft as well. These companies are not going away. Right now, it's just too short-sighted, and people are, bitching and moaning about, oh, this and that. It doesn't matter. It's here to stay. So
Do
get
you have
over it.
do you have any yeah, do you have any charts on any of the IPOs that you can put up and give a little bit of an
Oh, I did not set my charts up for
okay,
that,
no.
but if you give me like 5 minutes, because it takes a few minutes for the Thinkorswim to be open, I can
Well, I
show
would
you. But I
yeah.
yeah, let me open up my.
I think that would be interesting to the listener, because these things are in the news, and it seems like you're following them pretty closely. So your opinion and your view on them might be interesting to some of the listeners. You know what I mean?
To be honest with you, because it's only been like one or few weeks. Lyft is what, a few weeks, and Uber is like a couple of weeks. You
Right.
can't really watch the charts. There's nothing to base it on. That's the
I
thing
get it.
with IPOs. I honestly, this is just from my own opinion. Uber is, I live in Guatemala. Uber
Oh,
is everywhere in Guatemala. So if it's big in Guatemala, could you imagine how it is in the rest of the world? Uber is here to stay. Lyft is a US company. Every time I go to the US, my family prefers Lyft over Uber for whatever reason. I love them both. They're there to stay. They're there to stay. And
yeah.
that's all it is.
No,
Um,
I agree with you.
that's why I love it.
The ease of travel with these guys is just ridiculous. I personally have used Uber, and it just is ridiculous how quick they get there and how inexpensive it is and how efficient it is. So there's no doubt in my mind. It's just a question of the economic model, I guess. There is a valuation on everything, and
Right.
that is the Achilles heel of all these things. There's no question that Lyft and Uber have got legitimate businesses. The only question would be is at what price, and that's why the thing's bouncing around as it is, right?
Oh, yeah. Also, think of it like this. Amazon, it was losing money forever. So this is my long term. Like, this is something that I want my kids to cash in on 10 to 20 years, because by then it will settle down. And it's a word now. It's part of our vocabulary. I'm Ubering,
Right.
I'm
No,
gonna
no
Uber
doubt.
it.
There's no
So
doubt. Yeah.
that's how I look at those things.
Yeah.
Like I said, I'm a technical trader, so fundamentals mean very little to me. I see how they work. Like someday, a company that has amazing fundamentals is going to fall 10% because somebody said something. So there's
Right.
too much drama behind that for me. That's why I don't really follow fundamentals. This is just my own instinctive type of trading, right? So right now I have, some money put away for two more IPOs that are, I'm not sure when, Airbnb and Stripe.
Right.
Airbnb
Right.
is another one.
Right.
So looking at the fundamentals at the moment, it's too rocky to tell.
How about the
So that's
marijuana stocks? Is there anything you're doing in the marijuana stocks, the pot stocks? Anything there?
yeah. I got into the green rush a little late, like really late. I got in right before 2 months before Canada passed their bill, thinking that was going to be awesome. So I bought God, I can't remember, Aurora. Well, I bought Canopy Growth, which has been doing fantastic, and I got the ETF. I really believe in the cannabis field. And again, it's been battered. I mean, 50% loss, but I'm okay with it because you know what? It's here to stay.
Yeah,
It might take a couple of years.
Aurora is not hitting that type of problem though. Aurora actually seems to have done fairly well in the last year.
No, I bought it really high.
Oh,
I bought it a really bad time. So
oh,
my particular position is being
I
really
got.
battered. But Canopy Grow's been doing really well. But again, I'm not really bothered by that. I'm literally sitting at like a 50% loss because I got in too high. Yeah, I'm not worried. It's here to stay.
Yeah,
Cannabis,
you
it's
believe in
here
the
to stay.
industry, and over time it can grow into the valuation, is what you're saying.
Totally. I believe in that. Yeah,
All
absolutely.
right, is Mark back on the fold? Mark,
I
are
am.
we with us?
I'm
Okay.
here, and I actually don't have any. I don't have any beepings. My tech guy fixed it.
All right, great. I was going to ask you. You showed us a little bit on the E-mini and on the Nasdaq future. Anything besides those two futures that might be of interest to the listener that you're watching that you think there could be an opportunity in right now?
Well, actually, I'm sharing my screen right now, and I think you can see the E-mini.
Okay.
And there were two great trades on the E-mini this morning. One entry went 3.25 points. It's right here. I have the arrow pointing to it. The candle's got order flow. It's got multi-time frame momentum. It's also got the correlative markets, the Dow, Nasdaq, and Russell heading down at the time. It's got pink background bias. The entry was right here. Maximum excursion, 3.25.
Now, Mark, I'm gonna hold you up for a second here, and just so the listeners really understand what the heck you're doing. I understand that you are watching momentum quite a bit, and could you explain how when you're analyzing these things, what these lines at the bottom and the top are showing you? Obviously, there are ways of trying to establish some kind of momentum, correct?
Sure. The lower line, we use a Laguerre to look at momentum, and we've modified the Laguerre, so we came up with this incredibly innovative name called the modified Laguerre, because it has a gamma and it has multiple filters. We've made this line move quickly, but it's also very stable. Most oscillators and momentum-based indicators are configured to look for divergence. And I don't believe in divergence because institutional money drives the market and multiple divergence signals get run over. So what I'm looking for is I want to trade in the direction of a lockdown oscillator. And you can see this line here, this lower line, it has the Laguerre locked against the zero line. Only significant selling pressure can do that. And remember, momentum is measuring not the speed of price movement, but the rate of change of speed. So what is happening here is this is moving down with greater and greater speed to the downside. But this is only happening on our chart trading time frame. The next line up is doing a multi-time frame assessment of the two higher time frames. Now this is a 2-unit Renko. It's looking at the 4 and the 6-unit Renko. If you traded, say, a 3-minute, it would look at the 9-minute and the 27-minute. You traded a 377 tick, we'll look at the 610 tick, and then the next higher fib. So this is looking at your two higher time frames. And so we've got momentum or acceleration of price to the downside heading in our direction on both our chart Laguerre and our two higher time frames. And then here, this line that's yellow, which made the trade a little bit riskier, was looking at the multi-time frame direction of the Dow, the Nasdaq, and the Russell. But because it was sandwiched in between two areas of red, I took the trade, and this candle's haloed in magenta. And that magenta is looking at what we create is a moving average based on the delta of each individual candle of the two higher time frames. and it gives us a really, really good assessment of buying and selling pressure. So we only sell off of a magenta candle and buy off of a blue candle. So and these dots are also a way we assess the correlative markets. For the E-mini, it's the Russell, Dow, and NASDAQ. They were both dark, and we had them on the trade. So the probability of this moving in our direction was very high. So we're looking for 5-tick first target, and we're looking for a 12-tick full winner, and we got it. This is a 13-tick trade. So everybody got their last target out. And then we had nothing, 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 and then perfect alignment right here off support. And that's the open price. And you see we've got green locked up on the Laguerre on our trading chart, multi-time frame Laguerre to the upside. In this particular case, we've got the Russell, NASDAQ, and Dow stoking up hard on a multi-time frame basis. Background bias is green. So the E-mini is up on a multi-time frame basis. We've got order flow aligned to the upside at a multi-time frame basis, dual dots, and we went up and we made 4.75. Now that's all that I looked at because we were done by then. And I didn't look at the rest of but see, here's another trade right here on this break of the pivot for a move to the upside. And then here you have nothing. And there's nothing without any background. And you see the long-term Laguerre here is yellow. So you have no trade. Here's another trade to the downside. It's a first target only, 5 ticks. Actually, it was more than 5. It goes 6. And then you're trading.
When you say 5 ticks, are you talking about 5 points on the S&P?
No, 5 ticks. We're day trading here.
Okay.
So these are small moves. Our full winner is 3 points, but our first target's 5 ticks.
Okay.
So I can show you any future that you like. Here's the YM if you'd like to take a look at it.
That's the Russell?
No, this is the YM, the Dow.
Oh, the Dow. I'm sorry.
And this was the Dow today. And I haven't really looked at them but here's a trade short on the Dow. Right here. And that's a nice winner. There's nothing. I never trade when there's no background. So I just ignore all this stuff. So I want a multi-time frame alignment. I don't want to trade into the pivot. And here we get the break right here. Green, green, green below. Candles haloed, dual dots, and up. And that's another winner on the Dow. Now,
do you have a chart for the Russell? Because some people might be looking at the Russell because obviously it never made a new high and it's now under some pressure and it's fallen under 1550. And some think if it goes under 1500, there could be some exciting volatility there.
I do.
So can you look at the Russell?
Yep. The thing is, though, on NinjaTrader 7, if you rotate the instrument, sometimes it just collapses. So I'm just gonna quickly open up a new chart on the RTY, and I'll project it. Just give me 1 second to put the template in.
Sure.
And I'll show you the RTY.
Yeah, because for some reason the transports and the Russell had lost some altitude, and you know, I've been watching the Russell and the transports, and they seem to have been leading the S&P and the Dow a little bit, both on the up and the downside in the last 6 months or so. So I've been kind of keeping an eye on it.
Now let me see. Okay, hang on. Let me put my Russell template in here.
Small caps and domestic Russell, you know, is kind of a good thing to keep an eye on if you're.
No, I agree. I totally agree with you.
Mm-hmm.
Okay, here's my Russell. Let me bring it over. And the Russell today, now NinjaTrader plays tricks with indicators that do a multi-time frame assessment. If they hear me, I mean, they don't like me saying that, but you have to read. You see how it's not giving me the right color for the dots? Orange is just it's not correct, but the background bias is, and all the other indicators are. And if let me just go to the open. I can see what we've got here. I haven't really looked at the Russell. See, here's a perfect short trade on the Russell right here. And this is an indicator we use to signal, actually. This is a software generated short. It's this bar. And it's very accurate.
And what's the time frame we're looking at?
This is a 2 Unorenko.
So it doesn't go by minutes. It's not a 1 minute chart, a 10-minute chart, a 15-minute chart. It's what?
It's not. Every 2 ticks, you get a new Unorenko bar.
I got you.
You can see time along the bottom. For years, I traded range, and before that, I traded tick. I like tick charts, and I think a 610 ticks. I mean, I like that time. It's a fib number, and I like it. But right now in this market, for capturing small moves, I really, really like Unorenko. And see this move right here? Get the wick back to resistance. You're trading. This is the VWAP, that golden line. The volume weighted average price. Right here, you've got order flow, you've got background, you've got triple reds here, and you've got this whole move to the downside on the Russell. I mean, honestly, I hate to say that's a gimme trade, but it almost is. And then, we're trading. I never trade into a pivot. I will not take a trade into a pivot. And there's nothing really here. I mean, there's potential. I could say they're potential winners, but they're just nothing I would trade. And then this is all clear, and I'm not going to trade it. And we're trading right here into the VWAP. Right above us, we've got the open price, which we're not going to trade into. And we're looking for background. Now, this trade right here is a loser. It's the first loser I found, but it's a signal. I would have taken it.
It's a false signal. False signal.
It's a false signal. And this is a winner, but you can't take it because order flow is not aligned. So it keeps you out of a winner, and it doesn't censor a loser. So you're not going to trade with 100%. 2 weeks ago, I traded with 91% winners. And so far this week, I'm 4 for 4. Last week, 85%. And right here, we trade the pivot break. And I just found these to be unbelievable trades because all these traders are sitting here looking to sell the market. And our pivots are created off the candle body highs, not off of wick highs. And when 2/3 of the candle body breaks the pivot, it's going to start to stop all of these sellers out. And it really pushes these trades up. So I take a little bit of leeway when I get a pivot breaker here.
I got you.
And then here, you see it puts the lid on the top of the market. So we're moving out. And we're moving into chop here. Nothing I would take here at all.
All right. Well, that gives us a little bit of an idea. I'm going to swing back over to Marina. Marina, you still with us, right?
I am. Hi.
Okay. I wanted Mark to give some time to explain how he does things and explain what he brings to the table a little bit. Obviously, both of you guys have got a lot of information to learn. I've been doing this for decades, and I'm still trying to absorb all the stuff that you're doing. So anyone who's listening, obviously, at the end of the broadcast, if you're a short-term trader, both of these guys have got a lot of information for you to absorb, and they'll at the end they'll tell you exactly how to do it. Was there anything else, Marina, that that you wanted to kind of cover? You showed us a little bit about how that S&P is kept on a short leash and how you go about trying to trade it. Is there anything else that you'd like to talk about, how you're trying to trade, or anything else to bring up?
Sure. So I actually, let me just share my screen really fast again. So basically, well, like you see, like I was saying, it was kind of just stuck here. I personally love divergence. I know there are a million traders who have a million different ways of trading. I call it artists.
Absolutely. Yeah.
But I'm very simple. I really just love to see what the market tells you with the basic indicators. I only work with a 610 chart, which is transactions, 610 transactions. I love reversal patterns, especially double tops, double bottoms, and divergences. Whenever I see stuff like this, I get out instantly if I'm in a trade, or I just completely stay out. I find that that is probably one of the easiest ways to really understand how markets work. Like here's another double top, massive divergences, total, same here. Let me just fix my MACDs. So yeah, to me, too many indicators and too many charts. This is the only chart I will ever trade on. I could trade from anywhere in the world. Yeah, I just like it simple, and I find that it works really well for me and takes the stress out of everything. I'll be honest with you, the stress of trading can get really out there, so I prefer to have it as simple as possible, ridiculously conservative. I don't think you need to be too aggressive unless you can, and some people love to play aggressive. So that's kind of my thing.
With your idea of aggressive, are you thinking the amount of positions you're trading, or are you talking about giving it more room? Or when you say more aggressive, how do you feel? How would you explain that?
So aggressive to me is going into trades that you think are going to move in that direction without like having that super strong basis for it. Also over trading, I find that that too. I'm probably good with 1 to 3 trades per day. My mind can't handle more than an hour and a half to 2 hours of really focused, deliberate trading. So I don't overtrade. I kind of like to say that I'm more like the hunter. I don't, even though I totally don't condone it. But to go for the big prey, right? Which is the super conservative trades that I know are going to be really strong. There's zero divergence in anywhere. It's usually when I first change, the trend first changes. Usually those are, I call them the initial trade. Initial reaction trades, which is usually when it's a brand new trade, the MACDs are really high. So when I have that, but if like, for instance, an aggressive trade would be, and some of my students do them, I say, great, just as long as you back test until you cannot back test anymore because you're just sick of it. 45 days around per new type of a trade. So some of them would enter like when the MACDs are close to the 0 line. Like I don't do that. To me, that's an aggressive trade because you still don't know the strength of the movement. That to me is aggressive.
Right.
Like I said, I'm very conservative. I like when my MACDs are flying high, and it's usually in the beginning of a new trend. Like here, well, this is totally sideways market, right? But for instance, here it was a little bit of a failure, and then it started to go up. And here, I probably would be looking into a trade, even though it didn't work out, but that would have been a valid trade for me. Like here, there was a lot of movement going up. As when it's right here, this is a very good example. Hang on. When there's a retracement and it's barely any retracement. Look at that. This is now change in direction. There's no retracement on the MACDs. It's way above the 0 line. This is my standing point for the archery. Like I was saying, I would be so in this trade. This is a beautiful trade. It just changed direction. So that's what I mean about conservative, right? The MACDs are showing me beautiful stuff. This is all beautiful. Oh, this is just a perfect trade for me, right? So that's what I mean.
Just to get an idea here, Marina, if I was somebody outside looking in, which I am,
Okay.
right now, 2846, where it started to break underneath that level, would that be the place where you'd take a shot at it, and then?
Oh no, at this point, I'm seeing a massive double top. I'm seeing divergence happening. I wouldn't be anywhere near this, and I'm still in this trading in this channel, so that makes me even more weary. But I would be nowhere near this trade.
So in other words, you wouldn't short it or buy it in that formation.
I wouldn't do anything right now. Nothing.
So on this chart right here we're looking at what point would you have maybe done some selling? Up in the 2853, 2854 area as it started to come down? Would you possibly do a sell up there?
I would be right here, 2846. I would have really, really considered it. This is a really, because we just bounced off that support area. Yeah. This right here where you see my thing. So this is it. You see, I would be in for 1 point. Let's say I would have gotten it easily. If I went in with several points, I would have been here. And then that little shift right here. So if I was still in, I would be out right here. I would be sitting on 1.5 points. And if I had several contracts, that's $50 a contract for each point. But now I'm seeing this massive double top, total divergence channel. This is when you just stay out. It's easy. Yeah. But, I'm very conservative. I can do that. I just sit out.
So right above that 2845 would be a good signal to get in, and according to what the stuff you're doing. And then as it goes up, you can put it on a short leash. And if it starts to crack it all, you get out right away.
Yeah. So this is another EMA line. I use this for 1597 transactions. EMA. So once it crosses this, what I would do, it's called an order weighting. I would put in my order weighting around here. Excuse me, and then move it up every time I see this going down, and then I would put it right here to fill me in, and then I would just wait it out. But you see here, look at that. Now there's kind of strength going down, even though I'm still, this is really ugly behavior for me at this point. So yeah, I will be very happy with these 1.5 points. I might even call it a day if I was trading, to be honest with you, with the FOMC coming up.
And it seems like you're focusing more, Marina, on the buy side, not the sell side.
Oh, God, no, not at all. I would look identically if it was going down. Identical.
But you do short positions as well as longs, you know what I mean?
Oh, I probably short more than I long.
Okay. And then you put your stop, and then you put your stop above or whatever, right?
Yeah, totally. It would just be inverse. I have zero non-discriminant against shorts or longs.
Yeah, okay. I just wanted to make sure the listener had an idea that you are definitely trading both sides of the market. It's not a long only type thing. Yeah. Okay. Well, that's good. That's good to know. All right, Mark, we're going to be coming into the home stretch here. Was there any other market or any other thing that you thought, maybe you want to do a quick explanation on the main focus of your analysis, which I believe is in the momentum arena, right?
Well, it's really just a multi-time frame analysis of both momentum, order flow, trend. But I just wanted to share an indicator that we're building right now, which I think is really going to be I always hate to talk in hyperbole. But I think this one's going to be a blockbuster, and it can be used on any time frame, any financial instrument. They're all going to obey this. But what I've noticed, if you slow the market way down and you count on market replay data, is that the green line is contracts per 10 seconds. We have an indicator that it'll go from 0 to maybe 250, and whatever that unit is at 10 seconds goes back to 0. So it creates a value for the number of contracts or shares or lots crossed per unit of 10 seconds. And what I've noticed is an institutional move, and institutions, what we're looking to do is to track money flow. I mean, when you get a multi-time frame alignment and trend, a multi-time frame alignment in all the index equities, Dow, Russell, NASDAQ, and E-mini, when you get a multi-time frame alignment in order flow, it's only because institutional money is put to work. Because each of these markets are closed systems and behave just like any closed system in physics. They want, by their very nature, to move it in chop, in random disorder. The only thing that creates order out of disorder in a closed system in physics is energy. And the only thing that creates order out of disorder in a market is money. Right. But getting back to this, so what you're going to see is you're going to get a huge shoot up in price. And then you have a 5 to 10 second window, in volume, where price is going to skyrocket on an institutional move. The indicator is going to give us this 5 to 10 second window to click along before price has moved a tick, a cent, or a pip, based on the slope of this volume rise. And when this is a precipitous, really strong move to the upside, and I'm calling this volume momentum, you're going to be able to catch a lot of institutional moves. Not all of them, but you're going to be able to catch a lot of them. And this is what we're just working on now. And
Okay.
If you just want a couple of my my options recommendations, I can throw them out to you.
Well, I'm going to let you do that as soon as you wrap up. Why don't you go first on wrapping up and give the ideas that you have and also how people can get a hold of you.
Okay, sure. For my for my options, I really like two. And one of them's a really long-term hold. It's a 1.5-year hold. And I don't do this very often. Because usually my options are 45 to 90 days out. But Albemarle is a Peruvian company. It's on the New York Stock Exchange. It is the biggest miner of zinc, and it went from 120 to 67 because of the fact that Peru put a cap on the amount of zinc they're allowed to extract over the course of a month, and it took that hit about a year ago. It's been sitting, between 60 and 70.
Right.
So what I'm doing is I'm buying I bought already a January 15th, 2021 75 call. I think Albemarle will be well over 100, if not higher. And the other position that I really like right now, I don't think we're ready to get into it, is Broadcom. I like the fact that it's taking this big hit. It's way down, and it's taking this hit on Trump's embargo of Japanese telecom.
Sure.
But once that's sorted out one way or the other, I think it's going to do really, really well. So
well, let's get into this, Mark. Let's get into how people can not only get these ideas, but all this other information that you've been talking about. Because frankly, a lot of this information is very, shall we say, in depth. And if people want to learn more about short-term trading and the way you approach these things and some of your different picks, how do they get a hold of you, and how do they go from there?
Sure. I just want to let you know, I won't put up my Superdome, but I only trade 2 contracts. Very, very small number, because a lot of people in my trading room only have small accounts. So I don't run up huge numbers because I don't care. But we're up almost $3,800 this month. And we're ready 4 for 4 on Monday, today. And
so do you have a website and a way for them to get a hold of you?
Yeah, we're at www.rightlinetrading.com, and our phone number is 786-732-4656.
Okay. And again, that's a lot of information for people to get a hold of. And then after they get the information, they can make their own decision what's right for them and what's not right for them. I'm going to switch over to Marina now. Marina, do you have any quick pick and how people can get a hold of you?
Yeah, so for quick picks, because I'm a very long-term investor as far as stocks and whatnot I don't really have anything for like short term, but I really believe in the IPOs that just came out. I personally believe they will be great within several years once they pass the rockiness. The growing pains, everybody's got growing pains. And as far as the way I trade my futures, I love simplicity. I only use 2 indicators, which is one EMA line and MACDs, and then I just read what the market tells me, reversal patterns, divergences, support, resistance areas. So that's kind of how I do everything. through here. Like I said, you see how it's just bouncing up and down. And I like the EMA line as that analogy I use for the archer, because you don't want to just go and start shooting your arrow from anywhere. That's really what I use my EMA line for. I don't really go deep into the analysis because that drives me into paralysis. And I think that anyone could trade because they don't need to know anything. Just reading charts is kind of the beauty of it. Really, it's just so beautiful. They tell you everything you need to know. And as far as
do you have an email, an email and a way for people to reach you?
yeah, so this is my site, the Trader Chick. You could check out my courses, and you could either go here to thetraderchick.com or thetraderchick@gmail.com. And yeah, once you get in there, I also have a private Facebook group, which is really active and a lot of really fun traders there. And that's probably the best way to get in touch with me. And I love to chat with new traders. I really love new traders because I know it could be really scary at times. So,
Yeah, there's an awful lot to learn, and you guys are doing the short-term trading. There's really a lot to learn, so it's very important for everybody to write down those those websites and contact these guys and get some more information. I thank you both for being here today. God, there's a lot of information for people to get into, and really a lot for them to follow up on by checking it out and getting in touch with you.
I'm sorry, Marina, go ahead.
Oh, no, I just wanted to say thanks to Jim. He was a really great moderator.
Oh, thanks, Marina. I appreciate that.
Jim, can I close with just a humorous thing I saw on Benzinga, and has nothing to do with the value of the stock or anything. They did a study, and they swabbed the back seat of I don't know, hundreds of Ubers, and found that it's 30 times dirtier than the average public toilet seat. I don't want to be gross.
Well, I don't know that addition was needed, but thank you, Mark, for that. To close it out here, I'm Jim Kenney. I'm Jim Kenney, and I've had nothing but fun here today. I hope you guys enjoyed it as well. And for those who want to learn more about what I'm doing, Option, OPTION, Professor.com. I have a weekly broadcast. You can get the link by going to the website. And if you have any question on the options, shoot me at email, optionprofessor@gmail.com. I'm going to turn it over to David now. We're about 4 minutes over, but I think we did a great job overall.
Yeah, lots of great information today. So just a quick reminder for me: be sure to subscribe to Timing Research at YouTube and your favorite podcast directory. You can also go to TimingResearch.com to get access to any of the past show archives or reports. Be sure to join us tomorrow for the next episode of Analyze Your Trade. Jim will be back to moderate again, and Mike Pisani and Neil Batho will be there for that one. And just want to thank my guests again for today. Marina Villatoro of thetraderchick.com, Mark Sachs of rightlinetrading.com, and Jim Kenney of optionprofessor.com. Thanks, everyone.
Thank you, David.
Thank you. Bye.